Well, let's talk some Tesla because, as we said earlier, a day does not go by that Tesla is not in the news. And the stock plummeting at 13% on Friday after its CEO Elon Musk announced that the company was going to lay off 7% of its workforce. Joining us now is Dan Geltrude, CPA and business analyst at Geltrude and Company, and Chris Versace, Chief Investment Officer at Tematica Research. Guys, it's great to have you with us. Dan, we're going to start with you. In that letter to employees, right, dated Friday, Musk saying that the firm faces, quote, a very difficult, end quote, road ahead. What do you see as the number one issue for this company as we enter 2019?
I think the biggest challenge remains on the balance sheet for Tesla. And the reason I say that is because they are so leveraged. There's so much corporate debt there that they really don't have a lot of wiggle room when it comes to moving forward with profits. Now, in the third quarter, we saw a very nice profit, unexpected, by the way, $311 million. He's already signaling, let's not expect that for the fourth quarter. Things are a little bit tougher and the road is a little bit rougher. However, we do have good news with Tesla moving into Europe now. They just got the green light. So I think there's a lot of positive ahead for them.
Right, the Model 3 in particular going
yes.
to Europe. Tesla has had that presence with its other vehicles in Europe already. Chris, weigh in here. What do you make of Dan's comment about the balance sheet issues that Tesla faces and the leverage issues?
Well, I think he's right. I mean, the reality is that a lot has to go right for Tesla in 2019. The bigger issue, and it speaks to the issue of the debt, is cash flow, being able to cover the interest payments that they'll have. They need to get the Model 3 right. And the issue there is, yes, it's the first quote-unquote affordable Tesla car, clocking in around $35,000, but it's a profit issue on that car. It's really a negative mix shift for them. So the more they make, the less profit they're going to garner. So it's a production issue for them. Kind of at the end of the day. And let's remember, too, that you've got a increasingly competitive landscape. Toyota, Daimler, Volkswagen, and these other companies are coming in. And while the point is correct that they're expanding in Europe, they're going to have a tougher time in the U.S. as the subsidy for these electric vehicles falls yet again middle of this year and then vanishes by the end of 2019. So particularly in the domestic market, it is going to be a challenging time for Tesla, and that could reignite those balance sheet concerns as we move through the year.
That's a good point, Chris. Both of you seem to be in agreement that the balance sheet is a little murky when it comes to Tesla. We're looking at a stock chart which shows the massive drop in the stock that we saw on Friday. And Dan, usually when a company announces restructuring, you see the stock actually pop. And so what does this massive 12-13% drop on Friday tell you?
Well, it tells me that the market is concerned whether there is going to be demand for the Model 3. Because a car company having layoffs of workers, I mean, is that really news? So why would it have this type of impact? And the reason is to say, is this for real? Can they really get market penetration? I think Chris brings up a good point about the Model 3. Profitability on that car coming down to a sales price of $35,000 now becomes an issue. Now, the other thing we have to be concerned about is, or Tesla needs to be concerned about, is Volkswagen opening up a plant in Chattanooga, Tennessee.
That's right.
Right? So now they're looking for market penetration in the U.S. They're looking to have cars rolling off the assembly line in Tennessee within 3 years. And by 2025, they're talking about producing 1 million electric cars. That's significant, and that's a threat to Tesla.
And interestingly enough, Tesla reports indicate that Elon Musk and Tesla are thinking about opening their own gigafactory in Germany, which would, of course, be Volkswagen's home territory there. Chris, weigh in on what Elon Musk and Tesla executives have to do in order to make investors feel a little more comfortable. Because if we think about Tesla over the last year, it has been incredibly volatile. Think back to that take private tweet, and then of course before that, layoffs, then an amazing quarter, and then, as Kristen mentioned just now, layoffs last week.
Yeah, so I think your point, Tim, is it's an extremely volatile story. These cult stocks that some people hate to love and love to hate tend to be that. I think the bottom line is, going back to Dan's point, if they're expanding in Europe, why are they making layoffs, right? There seems to be a lot of conflicting points as to what's going on, and that really raises questions of confidence, really investor confidence in the management team. And I think that if they can come out and paint a story that says, look, we're retrenching here, we have opportunities abroad, we're launching models abroad, production abroad, getting our infrastructure in line so we can deliver and reduce the cost curve of these models, I think the market might come around for that. The only question I have, though, is, in 2019, again, a very big year for a company that is seeing negative mix, that is going to see an increasing competitive landscape, and has a key driver, these subsidies disappearing, and worrying about the balance sheet. That's a lot to tackle for any one company.
To Tim's point here, guys, let's pull up the one-year chart of Tesla. I mean, this stock is more volatile than an emerging market. It is all over the place. That is just the past 12 months. Dan, do you expect this company to be profitable in the fourth quarter when we get this report in just about a week's time?
I'm going to say I think they'll be somewhere around a break even, perhaps a little bit of a profit. I'm not expecting significant profits. If there are, it'll be a significant surprise.
Is that sustainable?
Is what's sustainable?
The profitability.
I think so, and I'll tell you why. Although they're losing the tax incentives in the United States, they are going to be picking up some in Europe. And let's not forget, we haven't talked about China. That's the whole new landscape as to where the race is going to go.
And an incredibly competitive one, too.
Yes, it will.
Okay, Dan Geltrude, CPA and business analyst at Geltrude and Company, and Chris Versace joining us on Skype. He's a chief investment officer over at Tematica Research. Thanks again.
Guys, thanks so much.
Thank you.
Thank you.